Hi everyone. We are studying ATT UK's UAE VAT diploma, and this is the chapter 3, which addresses supplies under the UAE VAT law. So, what are supplies? VAT is imposed on the supply of goods and services by a taxable person if the supply is made in the UAE unless the supply qualifies for exemption or is otherwise treated as out of scope. So naturally, every supply is either a taxable supply or an exempt supply, or in certain cases, it can be an out of scope transaction. Generally, the transfer of ownership of goods is the main requirement for a supply of goods to take place. So transfer of ownership, that is the key thing in the supply of goods, whereas a supply of services is generally anything that is not a supply of goods, because that is how it has been defined in article 1 of the UAE VAT decree law, uh, number 8 of 2017. Payment is not a requirement for a taxable supply to take place. For example, deemed supplies are within the scope of VAT, and no payment is made. So deemed supplies are, for example, you've made a supply to some staff or for the advertisement promotional purposes. So no payment is made, but it is still seen as supply. So that was the introduction. Now, some of the key concepts that we should remember, for example, consideration. It is any form of payment for a supply of goods and services, but be it cash or in kind. So it can be money, it can be other than money payment as well. Consideration includes VAT. So it is not necessary for cash to pass hands, as consideration is defined as follows: all that is received or expected to be received for the supply of goods or services. So either received or expected to be received for the supply of goods or services, whether in money or other acceptable forms of payment. So it can be money, it can be other forms of payment as well. For example, in return for goods, the customer may offer their time, for example, on arrangement where an arrangement where they work one morning a week in the VAT registered business, which would serve as the consideration or the price for the goods. They would not get paid for that morning, but instead of cash, they receive goods. So the consideration in this example would be the time the customer is giving to the taxable person. Hence, there will be a supply for VAT purposes, and the taxable person must determine whether they should charge VAT on the goods supplied. So like it's similar to a barter transaction where cash did not exchange hands, but one person gave his time in order to buy certain goods. Now, certain conditions are placed on this, 5 conditions to be precise. There are 5 basic conditions to determine whether a supply is subject to VAT in the UAE, and these are as follows. The supply is a supply of goods or services to begin with, like the entire supplies have been categorized either as goods or services. The supply must be made by a taxable person. So, naturally, those persons who are required to register for VAT, they are known as the taxable persons. Supply must be made by those persons. The place of supply is the UAE. So goods have been the place of supply is considered as UAE, is it's determined as UAE. So then only uh, a supply would be subject to VAT. That was the third condition. Fourth one, the supply must have been made by a taxable person in the course of business in the UAE. Supply must have been made by a taxable person in the course of business in the UAE. And then naturally the fifth one, it must be taxable supply by definition. So these are the 5 categories. There are, other than taxable supplies, exempt supplies, or certain out of scope things, transactions. So it has to be a taxable supply. These are the five conditions in order for a supply to be subject to VAT in UAE. All of the above conditions must be met in order for the supply to be subject to VAT in the UAE. Now let us talk about goods or services. The supply of goods is the transfer of ownership of the right to dispose of goods under an agreement. So let me repeat again. The supply of goods is the transfer of ownership of the right to dispose of goods under an agreement. Uh, the supply of goods also covers the conclusion of an agreement for the transfer of goods in the future. So that's a contract to sell, like that's something that happens at a future date. The definition of goods specifically includes the supply of water and all forms of energy. So interestingly, goods also, the meaning of goods includes water as well as energy. For example, electricity, gas, etc. Even electricity is supply of goods, gas, natural gas, etc. Lighting, heating, cooling, and supply of real estate. Even the real estate is considered as supply of goods, including the lease, sale, and any other form of disposal, causing the transfer of ownership thereof from one person to another. Uh, this is all addressed in Article 5, Clause 1 and 2 of the VAT law, and Article 2 of the regulation. Now, that was all about supply of goods. Now, let us talk about supply of services. Services are defined in Article 1 of the VAT law as anything that can be supplied other than goods. A very interesting definition. Anything that can be supplied other than goods. So, supplies of services include, among other things, the granting of the assignment of a right, transfer of shares in an asset. So there is a right, and you can assign it to another person. So that's the granting of assignment of the right. Transfer of shares in an asset, uh, transfer of licensing or intangible assets like the right of use, etc., such as copyright. So these are the examples of supply of services. Note that Article 3 BIS has been added to state that the following will not be considered a supply for VAT purposes. This is a new article that has been added, Article 3 BIS. The grant, transfer of ownership or disposal of government buildings, real estate assets, and similar projects from one government entity to another. So these will be considered as out of scope. The grant or transfer of the right to use, exploit, or utilize government buildings, real estate assets, and similar other projects from one government entity to another, including any such rights granted or transferred effective from 1st of January 2023. So prior to this date, these transactions will not be considered as out of scope, but post 1st January 2023, these transactions will be out of scope of VAT. For the purpose of the above, government buildings, real estate assets, and similar projects shall include the following. What is covered within the meaning of these expressions: government buildings, real estate assets, and similar projects. Premises of government entities, government capital projects, government infrastructure projects, real estate assets used and utilized by government entities, real estate assets allocated and utilized for public utilities and public use, and developed government land. All of these they constitute the interpretation of the expressions government buildings, real estate assets, and similar projects. The scope and definition of government buildings, real estate assets, and similar projects shall be specified through a decision issued by the minister. Uh, Article 3 base of the regulation. So this is an article in the regulation. So there's a decision that is going to clarify the scope and definition of government buildings, etc. but I think we've already read that. A government entity is defined in Article 1 of the VAT law as ministries, government departments, agencies, authorities. This is all defined in the Article 1 of VAT law. And public institutions in the UAE, whether federal or local. So we have Emirates, right? So Emirate level entities and governments, they're also considered as government entities. Or any other entities treated with the treatment decided for the government entities in accordance with the decision issued by the cabinet. The UAE place of supply rules are different for goods and services. So that's a very key point for us to remember. Rules are different for supply of goods and supply of services. So the distinction between the goods and services is important. Generally, the place of supply of goods is the UAE, where ownership of the goods passes in the UAE. The place of supply of services is generally where the supplier is resident. So that's a key difference. So let me read it again. Generally, the place of supply of goods is the UAE, where ownership of the goods passes in the UAE. So in case the ownership is being transferred within UAE, then the place of supply for goods shall be seen as UAE. But in case of supply of services, the place of supply of services is generally where the supplier is resident, the service provider, software provider, or any other service provider. Wherever that person is residing, that will be seen as the place of supply of services. Uh, Place of establishment is defined as the place where a business is legally established in a country. Place of establishment is defined as the place where a business is legally established in a country. So, is there a contrasting expression other than place of establishment? Yes, we will see that. It will come shortly. Or where the significant management decisions or management functions are taken. So that's all place of establishment and conducted. Now, remember I was talking about a contrasting expression, that it is that expression. A fixed establishment is any fixed place of business other than the place of establishment in which the person conducts their business regularly or permanently, and where sufficient human and technology resources exist to enable the person to supply or acquire goods or services. So if you want to think of this second expression, fixed establishment, remember the concept of permanent establishment in corporate tax. It is very similar to that concept. In corporate tax, we call it permanent establishment. In VAT, we call it fixed establishment. Is any fixed place of business other than the place of establishment in which the person conducts their business regularly or permanently, or where sufficient human and technology resources exist to enable the person to supply or acquire goods or services, including the person's branches. So you remember branches also we used to call permanent establishment in corporate tax. So here we call it fixed establishment in VAT. For a fixed establishment to crystallize, it is not a requirement that the person must own the premises. Yes. So it's a fixed place of business. You don't need to be owner of the place, but the sense of permanence must be there. Uh, there are also important distinctions between goods and services in the pre-registration input tax rules. So, you incurred VAT before getting registered. So we're talking, this chapter is talking about that. Input VAT incurred on services prior to registration can be recovered on services received in the 5 years before registration. So up to 5 years before registration, if you have incurred input VAT, that can be recovered. This is as per Article 56 of the VAT decree law. There is no time restriction on the recovery of pre-registration input tax on goods. So there is no time restriction. Note that these goods and services need to have been used to make supplies that give the right to input tax recovery after tax registration. Note that these goods and services need to have been used to make supplies. That's a governing rule. So you can claim the VAT recovery input VAT recovery only if you have used those goods or services to charge output VAT from customers. If you did not do that, then you can't recover. That gives the right to input VAT recovery. Now, supply must be made by a taxable person. That was a key criteria, right? The second condition for any transaction or any supply to be subject to VAT was supply must be made by a taxable person. The second condition is that the supply must be made by a taxable person. Article 1 of the VAT law states that a taxable person is any person that is registered or obligated to be registered for VAT. So that's the Article 1. Who's a taxable person? Any person that is required, that is registered or required to be registered for VAT. This is any person that has exceeded the mandatory registration threshold or is expected to exceed the threshold in the next 30 days or has registered for VAT voluntarily. This includes supplies received by a taxable person in the UAE that are subject to reverse charge accounting by the recipient. So imports, we talk here, they're talking about the imports. So even the amount of tax VAT that a taxable person has had to pay on the imports, even that is counted. And if altogether the total supplies that the person has made uh, has exceeded the mandatory registration threshold. Mandatory means 375,000 dirhams per annum. So then the then the person is required to register for VAT and it is then called a taxable person. Note that once a person has registered under voluntary registration rules, that person will also be considered as a taxable person, of course. Now, supply in the UAE. The third condition was that the place of supply must be the UAE. So that was the third condition. So subject to various overrides, generally the place of supply of goods shall be in the UAE if the supply was made in the UAE and does not include export from or import into the UAE. Let's read it again. Subject to various overrides, generally the place of supply of goods shall be in the UAE if the supply was made in the UAE and does not include export from or import into the UAE. So pretty simple actually. If the supply was made in the UAE, then the place of supply is the UAE. The general rule for the place of supply of services is the place of residence of the supplier. However, for services supplied to customers resident in another implementing state and registered for VAT purposes, then the place of supply is the place of residence of the customer. So we need to remember that they are talking about the implementing states. And when we talk about implementing states, we're talking about those GCC states who have already implemented the VAT law. And those states include, other than UAE, Saudi Arabia, Oman, and Bahrain. So only for these three countries, if the customer is registered for VAT purposes and there's a service provider who's residing in UAE provides services to those customers, the place of supply will be the country of residence of the customer rather than UAE. That's the difference. Otherwise, for all other scenarios, uh, where the supplier is residing, that will be seen as the place of supply. There are various overrides to these basic rules within Article 30 and 31 of the VAT law, whereby the place of supply of certain services is either where the services are performed or used. So we are going to have a very detailed discussion around that going forward. This is very basic. Supply by a taxable person conducting a business. That was another condition. Or out of the five conditions, we have read quite a few. We've read. Let's give it a recap actually. So the five conditions are the place, the supply is it must be either supply of goods or services. Second was it must be made by a taxable person. Third was the place of supply must be UAE. Then two more conditions are remaining. Uh, the supply must have been made by a taxable in the course of the business, ordinary course of business. And then the fifth condition, it must be a taxable supply by definition. So we are on the fourth condition. Uh, Supply by a taxable person conducting a business, ordinary course of business. So the next condition is that the supply must be made by a taxable person conducting a business, right? A business is defined in Article 1 of the law, which law? VAT decree law and regulations as follows. Any activity conducted regularly, you'll see three criteria. Any activity conducted regularly, ongoing basis, independently. These are the three key things. Everyone has a different meaning. Regularly, ongoing, and independently by any person. It can by any person meaning it can be natural person, it can be juridical person also, legal person also. In any location, such as industrial, commercial, agricultural, professional, vocational, excavation activities, or any thing related to the use of tangible or intangible property. So, this is a very broad definition of business, and the key point is that it has to be the person should be in an independent capacity, not like an employee or totally dependent on the uh, you know on the other party, or it should be on a regular basis. It should be a going concern. All these criteria define a business. So if it is a business which is making supply, then only it will be deemed as a taxable supply. For example, an employee is not seen as carrying on a business. So we discussed that because of the dependency. The employee is not an independent party from the employer, it's a dependent party. Then we had one more condition: taxable supplies, exempt supplies, and outside the scope of VAT. The final condition is whether or not the supply is a taxable supply. So once it has been established that there is a supply, then we need to determine whether the supply is taxable, exempt, or is treated as outside the scope of VAT completely. So that, these five conditions are the basic conditions which have to be met in order for a transaction to be taxable. Thank you very much. We will soon meet for the next chapters.